ARK Invest director Tasha was just asked about her concerns about Tesla, and this is what she said.
So I'd be much more concerned about traditional autos and their competitors than I would be about Tesla.
That sounds like a fair response to me. Let's see ARK Invest's reaction to Tesla's earnings, and then I'll go through today's news.
Tesla said that it doubled its AI training compute. Why does that matter? Because Tesla has this immense data advantage over peers when it comes to solving for robotaxis, because it's using its customer cars to gather information. So now we think that Tesla's getting over 2 million miles in FSD, its full self-driving software, per day. I mean, compare that to robotaxi peers. That's like half of what, Cruise, GM's effort, has gotten in its entire lifetime.
Everyone right now is just mostly focused on the negatives, and it's so easy to ignore all of these positives that, for example, Tasha is bringing up here.
I hear you. Elon Musk has a long history of predicting things and then being late on those timelines. He's certainly gotten better at it. But ARK has always had 2024 as the midpoint of their launch of robotaxis. So I still think that's possible. But here's like the information that we do have, right? Why should you believe Tesla's statements? Well, we're seeing these videos that they're Tesla is putting out of full self-driving capability. No hands on the wheel. They released a recent video of Austin recently, the car driving successfully on and off a highway. But more importantly, we're seeing videos from customers. And actually, someone in California did a full ride-hail ride where they don't even touch the wheel at all, just the very beginning and the end. So it looks like it's really, really close to being there, certainly in some situations, right? And then to your point, when is it going to be available everywhere? Well, I think they'll start, in the major cities where it works the best. So we'll see it in places like California and Texas, where, we know that there's a heavy density of Teslas today, and the cars drive well there. I think in the next decade, that's when we could begin to see, robotaxis dominating urban transit as a whole. So that's what we're excited about as at ARK Invest. And I think that this market could be worth, nearly $9 trillion in the next decade or so. Tesla's really the leader in this, again, because of that massive data advantage.
Yeah, I think we will see Tesla first in San Francisco, then Austin, and then in California, for example, in LA. Where I live in Vancouver, I like to drive with FSD on if I'm just by myself, but if I have passengers, I turn it off unless I'm driving through an area that I know very well. I know exactly where FSD is going to just brake suddenly or do something silly. But when I talk with people that live, for example, in LA, they have a different experience. Generally, their experience is pretty good.
Automotive margin falling for the fifth straight quarter here, ex those regulatory credits. 16.3% was the margin, below the average analyst estimate. Is this a problem for Tesla?
So, yeah, we expected margins to decline. We know that price cuts have, there's been significant price cuts over the past quarter. We even heard Elon say in the last call that they could continue to cut prices because of interest rates, because of, how consumers are feeling, and they need the cars to be affordable. But let's talk about the big picture, right? A Model 3 is actually cheaper than the average car in the US. That is huge. Electric vehicles are continuing to grow at a rate that's much faster than their gas-powered counterparts. So I think that's the long-term story here. So yes, I would expect it to affect margins in the short term. Long term, our estimate is that Tesla could get margins that are around 50% with electric vehicles and autonomy by 2027. So that's, again, what we're excited about. And autonomy really changes that whole profitability profile, because we think a robotaxi network could be a services business where, again, you'd get really attractive cash flow coming off of each vehicle per year, right? It's not just a one-off sale anymore. So, I think it's affected. I would consider it a short-term metric. We do see them bringing costs down out of the car continually. They did that again this quarter. I expect that to keep happening. And they're riding down a cost decline curve that no one else can keep up with on electric vehicles, especially since they're so vertically integrated on batteries. So I'd be much more concerned about traditional autos and their competitors than I would be about Tesla.
If you have been disappointed with Tesla lately, take a look around. Let's start with VW. It invested $700 million into XPeng to jointly develop EVs in an attempt to counteract losing market share in China. And you only team up with competition when you cannot do it yourself, and VW cannot do it themselves. VW was once the biggest automaker in China, where its biggest market is. From 2008 to 2020, it held 15% market share. That's now down to 10%. They canceled the Trinity EV project facility. That's $2 billion, citing complex industry challenges. Instead, they will move production to this other place. They terminated free shift production at this plant due to muted demand for EVs. This is where VW makes cars like the ID3, 4, and Audi Q4. VW's net cash flow was $11 billion in 2019, and it was down to $5 billion in 2022. And then let's not even think about all of the software issues that they have been having. And due to these, Porsche Macan and Audi Q6 EV models were delayed. And now Ford, they had multiple recalls. They also cut a shift from F-150 Lightning production due to lagging demand. They warned it would lose $4.5 billion on the EV business this year. They delayed EV target production rate of 600,000 to 2024 from 2023, and its goal of 2 million production rate by the end of 2026 is now we don't know when. And they are also facing material cost increases from UAW negotiations. And don't even get me started with GM. I'm just gonna skip this one. Meanwhile, Tesla refreshes Model 3 and partially Model Y, announces Cybertruck deliveries, post record energy margins, which was a big moment for Tesla, is still generating positive free cash flow, has $26 billion in cash, doubled its AI compute quarter over quarter, which helps alleviate the main FSD bottleneck. It increased 4680 production 40% quarter over quarter, invested record amounts in capital expenditures and R&D for the future, and responsibly prepared investors for a potential slowdown. Yet we have people absurdly calling Tesla leaderless. If you weren't looking around, yes, this is actually happening. They are calling Tesla leaderless right now. And they are even calling for a new Tesla CEO, despite everything Elon Musk has done and all of the evidence pointing to the fact that building compelling EVs profitably at scale is incredibly difficult.
Yeah, I think the Cybertruck could be huge. We have some research about it on the ARK Invest website. My colleague Sam Kors has done a lot of great work. We've looked at Google Trends information, and it overlaps, really well with areas in the U.S. where we have that, very interested truck buyers today. So I think some people think this will be a niche vehicle platform. I don't think so. If I was Ford, who's, they're already cutting the production shift at the F-150 Lightning plant in Detroit, I'd see more trouble coming for them ahead as the Cybertruck rolls out. I mean, maybe that's even why they're cutting production. Maybe people are holding out because they see that Cybertruck delivery deadline right around the corner. And when we saw a vehicle go for $400,000, one of the early reservations this past quarter, it's obviously a multiple of the purchase price. I mean, it's already a collector's item before it's even in consumers' hands. I mean, that's just the power of the Tesla brand. So I'm excited for it.
I think the Cybertruck sends a strong message, not just to investors to buy the dip, but also to consumers. When they will see these on the streets, they will want to know more about it. But much more than the Cybertruck, what excites me is Tesla's energy business. With 24% margins and Lathrop still ramping and Shanghai Mega Factory still not opened, energy is starting to feel like the Model 3 and the Model Y ramp felt like before. Huge margins and huge volume eventually. If you are a new Tesla stock investor and you don't know what happened when Tesla started ramping the Model Y, well, let's just say the stock skyrocketed very quickly. The Model 3 ramp though was extremely difficult. And it took some time for the margins to start showing up. But I do agree that the Megapack ramp is looking a lot like the Model Y ramp. Now, this post went sort of viral on X, but I do want to push back against Jacob here. He says that Tesla's energy business is worth almost 1/5 of the whole company. If we did our valuation on, let's say, 2030 numbers, then I wouldn't be pushing back. But he did the valuation based on present numbers, and currently Tesla's net income, well, you look at the net income and there's not much from energy. The little area in this yellowish color is not 1/5 of Tesla's business. But that will change in the future. And that's why I like this comment from him so much. Reportedly, the upgraded Model 3 has been delivered to its first customers in Germany just now. So this is very good. I just found this chart that shows EV fuel type loyalty sorted by luxury brands. And as you can see, when someone buys a Tesla, they stick to EVs generally speaking, but if someone buys an EV not from Tesla, yeah, especially if it's a Porsche, they are not buying another EV usually as their next vehicle. The big three automakers now have record offers on the table, but the union says they can do more. The situation for the automakers just seems to be getting worse and worse here. Amazon announced that it doubled its fleet of Rivian electric delivery vans to now 10,000. We have new consensus numbers. The delivery consensus for this year is 1.81 million, and the delivery consensus for next year is 2.2 million, now down from 2.31. Historically speaking, while Wall Street does give fairly alright numbers in terms of delivery estimates for the next 12 months, they have failed miserably to estimate Tesla's long-term deliveries. For example, if you go back to 2017 and you look at what they estimated for 2023, they seriously missed. James has a pretty good point here. It is great that people think Teslas are too expensive. This means that Tesla has a premium brand image and can charge more for their products. This is good. This is a testament to their strong brand and heritage. For example, the Roadster, the Model S, the Model X, the Plaid versions especially. Now, if only people knew that they could buy a product from this brand at a fair and reasonable price, this would actually translate very well into strong demand. The problem is no one knows, so this premium brand image is actually working against them because their production capacity and valuation requires higher sales volume. That post was in response to this. Those within my circle know very little about Tesla and what the company does. They all assume it's too expensive. End of story. I do keep seeing many people that say that their friends and their family members are not really aware of what the pricing is that Tesla is offering right now. And once people start finding out, I think that's when the sentiment is going to start changing about Tesla stuff. Wow, this sounds a bit ridiculous. Elon says our civilization is being slowly strangled to death, one regulation at a time. The SEC has proposed a new predictive data analytics rule that would severely curb financial services firms from using technology. We should really do the opposite, says Elon Musk. There needs to be comprehensive deregulation, period. In the meantime, Amazon just revealed these robots, and yeah, the future is very clear in terms of where we are heading. The most interesting part about this video is all of the people just looking at what's happening and maybe some of them are thinking, yeah, I need to find another job. These robots are, I don't know, the way they're walking with their legs, it's a bit creepy, isn't it? Here's another robot. This one is made by Germans, and it's able to move very interestingly. And it seems like it could actually be maybe useful. It can move fairly quickly, it seems. I haven't done all of that much research, so I'm not saying that this robot is going to be successful or anything like that, but overall, the direction is very clear. We will see a lot more of this. Artificial general intelligence is coming, and Dave says he's not sure if we are ready for it, but I agree with Steven. It's inevitable that AGI arrives before humanity is ready. And I would like to thank all of my Patreon supporters. By joining my Patreon, you will get access to how much I think it is fair to pay per Tesla share each year between 2023 2023 and 2033. If you sign up for the investor tier of support, you will also get my valuation model of Tesla stock with a 45-minute video walkthrough. And YouTube says you should watch this video next, but if you haven't finished watching that discussion about the future with Elon Musk, watch this one first. My name is Matt Potius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.